And here we are with another market weather bulletin. So today is Monday, March 9. So time to check for the Bitcoin chart and see if we can find some good trade setup. Last week bulletin nailed this short, as you know, as we were monitoring this local range, a potential deviation. We got the deviation and then we got the trigger for the short, but I think there is some new opportunity also in this price action, potentially for another short, and then if the price push lower, a long trigger. So stay with me until the end because we will see the setup as we speak. But as in all the market weather bulletin, we start from a naked chart and we try to make sense of the price action in a very ordered and organized way to make sure that we create a good habit to map level and to see what is happening. So no need to go too much in details on the high time frame chart, but very quickly we know that the uptrend has been lost, that Bitcoin is clearly distributing with these sort of ranges that are forming, that are usually deviating on the top and then pushing price lower. Range forming, leaving a lot of untapped lows on the way up, deviation, and then distributing lower. Exactly the opposite of what was happening when we were moving to the way up. Leaving highs here, deviation below, and then moving higher. So this is becoming a very clear pattern, and that's why we were preparing over the past weeks and in all the previous market weather bulletin for a potential scenario in the current range similar to this scenario here that we had back in January, November, and then with this final deviation in January. And the bias that we were forming was very similar to say, look, the range is formed, we locally stop to downtrend, we start to move higher, pushing against this resistance that in the past was 94, leaving all this low untapped, created a deviation and then start pushing the price lower. Similarly here, as you see, we started to push against the 72k level. There was a little deviation here, you can see in the daily was in the 4 hour. Again, we move leaving these untapped lows, so potentially we are trying to position ourselves to play the exact same scenario as we had in the past. Are we sure that history will repeat itself? No, but just the way I have to approach the market is not to say this time is different. I always try to think that probably this time will be once again the same, because history usually is a very good teacher in terms of price action. Then all the position have stop loss, always we have risk management, nothing is certain, so absolutely your price can start to push up and go outside of this range. But the philosophy I try to apply whenever I see a range is very simple. We range until we don't. So what does it mean? It means that as long as we are inside the range, we try to approach the market with a range mentality. Should the range be broken, we succumb to the opposite of a range is a trend, so should the range be broken, we will succumb to a potential trending scenario with everything that is involving a trending scenario. But historically, we also know that every time that Bitcoin is doing impulsive move, it ranged for quite some time. So it happened after this strong move down here, ended in end of November. We ranged until end of January, so for a couple of good months. We had a very impulsive move down here. we are reached 60K at the beginning of February, and we are ranging since more or less a month and few days. So still a very normal Bitcoin price action. Also important to note that despite all the turbulence there is in the world with the war in Iran and many other issues, Bitcoin is simply still ranging in this range. So we try to stay focused, we try to stay objective and accept the price action for what it is just a range. So the idea on this range was, and is pretty straightforward, we traded mostly on the upper part of the range. We deviated the top of the range. We created for sure a market structure break here or in lower time frame, somewhere here on the 15, 30 minutes, 1 hour. So as long as we remain constrained inside range, below range high, our approach is to expect a visit to the other side of the range, because this level was traded already a lot. This is a reliable range for two reasons. Range high is well respected, range high is deviated, and also because mid-range, that is this area at around 60K, 66K, has been traded and respected very, very precisely, even today with the bounce here at 66 at mid-range, and again a new bounce. So we have several reasons to believe that this range might continue to range. We have several reasons to believe that the lower part of the range has some potential to be visited. So the interest for us remain to exploit this range. So as a range trader, the way we have to exploit any range is to position short above mid-range, so in the premium part of the range, and to position long on the lower part of the range below mid-range in discount as close as possible to range low. So approach is very simple, stupid and straightforward, just to trade like retarded. That is usually the best approach in the market. We try to short as close as possible to this level, and we try to long as close as possible to this level down here. So if we go a little bit on lower time frame, we can see that price form this deviation. If we go even in further time frame, we see that all the local little range after this deviation that was here in the top of the range clearly show distributive pattern. So little range breakdown, little range breakdown, until something changed here. Then we can see better what is happening. So for the first time since the rejection back in Wednesday or Thursday last week, we see that this range broke down, distribution, we reach mid-range, that is this dotted line, and here something changed. What changed? That for the first time the deviation was below, price broke above, and these little ranges are starting to break to the other side. So as a trader, we always have to be curious and to see when something changes. You can see it in the market structure. If you see this is locally a bearish market structure, here this market structure has changed. Or you can see, to add confluence to the market structure, also the behavior of ranges. So if, for example, I pull you this range more or less here, you see that this range clearly is not distributing, but is potentially low time frame. This is the 5 minutes, deviating below, coming back inside, retesting mid-range, and then moving higher. So here we have a change, and this change can open some opportunity. Generally speaking, I'm not usually interested on trading mid-range, but that is this area here. But here there was something potentially to trade if you are into scalping. So what we know that locally we are pushing higher and some local behavior has changed. But we know that price is fractal. In a little higher time frame, we know that here there was a market structure break for sure, and potentially structure also here there was a market structure break. So we are in a bearish leg on high time frame. So even though there is a move on low time frame, the interest here remain as we approach range high, and as we potentially approach, this is a lower low. After a lower low, what we could look for, a lower high that does what? Push for another structure like this and potentially bringing us to the level we have interest, as long as we don't break above this 72k. So as you see, our logic is evolving, our logic is developing, and is creating some interest trading-wise. We also try to look for confluence on what we are looking, so we can potentially start to look at RSI, for example, in the 12 hours. We see that there was this reclaim of the 50 level here, but the level in this price action here, but the level was broken again. So now we are forming these 12-hour candles that we close tonight, and potentially this candle might go up, but still reject here in the 50 level and continue to go lower here. These are all speculation, so we don't know if this will happen for sure, but we start to have some interest. If we look here in the 4-hour, you see that we didn't come to really oversold territory down here below the 30 level. This RSI to me is not telling much. Even in this move down, there was no divergency. As you can see, price printing lower lows and also RSI printing lower lows. So there is no, to me, a big sign of momentum. There was this divergence here on the 1 hour, especially over the weekend on this move here, but time-wise, this is not really a valid divergence, because RSI divergence are time-sensitive, so we are looking for a period of 14 candles. So it's more relevant, this one, because we are within the 14 candles, and as you can see here, there is no divergences. So potentially this 1 hour divergence already play out with this move up, but at least for my style, I would not give it too much weight. So we have created bias, we have created level. Now we try to understand how to trade this developing Bitcoin price action. So very important, in case you want to trade Bitcoin on any other crypto, make sure to do it with me on Blofin. You will find the referral link on the description below to enjoy a 20% discount on trading fees, and to participate to all the cool campaign we run with the team. Blofin is a super cool exchange. I personally use it for most of my trading in crypto, and is non-KYC. So you just need an email address, no need to share any personal information to trade on the platform, and it truly takes 20 minutes to start to trade. So do not wait further, just click on the referral link down in the description below, so you will be ready to trade with me on Blofin like a professional trader. So going back to the Bitcoin chart, we have constructed, let's say, our logic around the price action. We have constructed our bias, our idea, and we know that potentially, as long as we stay inside this trade, we do have a chance of visiting this lower level of the range. We are so far not much concerned with this local bounce, because we know that it's normal in a range to have some reaction at mid-range. As you can see here, all the time we tap this mid-range, or either we got choppy like this, or we got these little bounces. So after this bearish deviation, we did get importantly, a bearish market structure break, and we are getting some local bounce. This local bounce, at least on my view, could be seen as an opportunity to go short again, and to go short again in important level of interest. So first of all, we look for some high time frame demand zone that could potentially be this 12-hour last green candle before the move down. We can see if we can find, no, not demand, supply, sorry. There is also a little consolidation that was this little range we saw forming on low time frame at around this level. We also pull, as usually, the bearish Fibonacci of this bearish move. Why bearish Fibonacci? Because this is a bearish leg, because it breaks the structure here. So we look for Fibonacci of the retracement of this level, and we started to get confluence there. We add also the fixed range volume profile to have further confluence on this level, and you can see that around exactly this level that we are mapping out, we get also value, we also get value area I. We make it blue so we don't confuse it. We know that here there is value area low of this range because we mainly traded on the upper part of the range, so this is still an interesting level. And point of control there, not that relevant at this moment. So we do have the confluence of this level. Also we map external liquidity level, in this case is this one, the famous low at 60k not tapped and potentially the target, and we have this external liquidity just here. We go a little bit outside of our range because we always zoom out. We know that there is some interesting equalize here, and we also know it's always important to map what you have outside of your trading area. In that case was our local range. We also know that there is, I think, this little low that was never taken just there. Then there is further lows down here, but not that relevant in this moment. So we know there is some boundaries here, and potentially nothing else. So now that we have created the boundaries of our local trading area, we have created some level of interest for a possible entry, we can start to develop potentially our trade setup. So the entry for us, as we explained at the beginning, for a short in a range should be as close as possible to value area high or range high that is more or less here. So the level are very close. So we start to look for potentially an entry around this level. Which confluence we have in this level? We have the confluence of this supply, and the Fibonacci golden pocket in yellow, and the Fibonacci 0.75 on that level. So already more or less exactly at value area high, we do have the confluence of those levels. Second part of the trade setup is the invalidation. So we know that this was already a deviation of this range. So potentially if this deviation was enough to push the price lower, and we know that this high has formed a bearish structure with this breaking structure here, potentially our invalidation could be placed a little bit higher or a little bit lower. I never put it exactly there. We have an invalidation around this level. Let me go a little bit deeper on this. So why I put it a little bit lower or a bit higher? Because if the price wants to go to that level, it will not just stop few centimeters lower, but he will probably take it. If you want to take it or create a double top exactly there, or a equalize like the one we have here, safer to be a little bit higher. What is the difference, or what is better? There is no better. Pros and cons for sure. The higher you put your stop loss, safer your stop loss is. The lower you put your stop loss, less safer you are, but the cons of this is the risk reward is for sure compromised by this. In this specific case, I would put it a little bit higher just to sleep more peacefully. So we do have an entry, we do have an invalidation. Sorry, just few words about the invalidation. Why? To me, it doesn't make sense to put it in this area here in the middle, because should the price start to take out this liquidity, at least the way I see it, should the price take out this liquidity, we are entering in this space here in a very not interesting area, at least to me, because potentially if we take out this high, what we are starting to create potentially a 3 drive, you see. So in case we take out this, would be a first drive, second drive, then my interest would be potentially on a third drive up here, and then the final rejection on this 3 drive. So no point for me to put the stop loss too much higher, because here we enter in a not really trading zone for me in this big area, especially because there is all these equal highs here at 79.2k. So if we break above here, we change idea, we change plan, we change everything. We are not anymore in a range deviation setup. We are potentially on night time frame still in a higher low, but potentially on something that would look more, again, more like this. So for this thesis, for this trade, nothing is perfect, nothing is sure, nothing is certain. To me, the price have no business to go above this high here. Otherwise, the whole range thesis would be destroyed. Third part and last of the trade setup is to look for a target. So the logical target is range low here down, or the liquidity level we map for at the very beginning, or this level to be taken out, and look for that high time frame swing low we map here with the second light lower. So the trade would more or less look like this, with the caveat that for sure there are interesting levels to take profit, that is more or less mid-range value area low on the way down, because we don't know should the price do this and go down. Last caveat, this trade could also be potentially split with 2 entries, one at the upper part here in the 0.75, one in the lower part here in the first part, with same stop loss and same final target, just to average a little bit the entry, or to make sure in case the bounce arrive only here to go down and at least be partially filled. So this is more or less how the second short would look like, with a potential bounce in this level and then a further move down. As always, absolutely not financial advice. This is the way I would like to position myself, and all the explanation I did until here is just educational. For the other interesting trade, and I think it's been weeks since I've been explaining about this trade, the other interesting trade is the long down at this level and the move up. So something that in the event that the short works out, something that looks like this, always with the very same range mentality we have been using until now, and the same range mentality we will keep using until this range keep ranging. So should this range be broken, our mentality will be changing. The caveat of this is that being in a high time frame bearish structure, I'm not interested on taking this short blindly. I need to see the lows been taken, the market structure break, and the move up, for the very same reason that I didn't try to long the level here, because we never get the sweep followed by the market structure break. As you can see here in this level, never the range triggered along. Many people try to long here, but we didn't, because there was never the sweep. As you can see, there was this little bounce here, but before the sweep, so no trigger. The moment it break, it never reclaim. It simply started to continue to go lower and lower. So the two ideas are these. Where this could be a bid to leave in the market, because already this is triggered with the market structure break and the rejection and the deviation, while this one need to be developed. To me, this is not a blind bid, is something that will be open and taken only if we get this deviation and this reclaim and the market structure break and whatever, as always in the range. So I think is everything for this video. Really hope you enjoyed. Really hope you watch also the previous one where we exactly saw this move, first leg down coming. Was very good to secure profit already on this on Ethereum, Solana and Bitcoin, so they were very similar. Now we see if we get a second opportunity. So is everything for today and for this week. Make sure to trade with me on Blofin if you want to take any of this trade. Referral link down in the description below, and also make sure to subscribe to the YouTube channel, leave a comment and a like. Let me know if you have any question, and as always we see you on X for the daily updates. Bye, take care.